Thursday, 23rd of May. Good morning. Okay, E-mini S&P. Still looking at that head and shoulders pattern. I don't need to go over that again. I've run over that every day for quite a long time. Just want to point out to you how we had got close to being oversold on the slow stochastic, and then we turned around. Now, markets, when bull markets don't tend to spend too long being oversold. As you can see, even down here after this big collapse, we weren't oversold for very long. We bounced back very, very quickly. I don't mind spending time in overbought territory for a long time when you're in a bull market, but we tend to bounce back quite quickly when we get oversold. So it looks like that's what happened in the middle of May when we got close to being oversold and we bounced back. Now the question is the trend changing? And I think it could well be. As you know, I've got my eye on this big double top pattern here, which seems to be playing out as I expected it would do. Certainly the weekly overbought situation needs to be unwound, and we are sticking quite nicely to my little bear trend pattern here. We've got this trend line going back to beginning of May, first week of May, so that's just working perfectly. Every time we touch it or get close to it, we turn around. So that trend line today comes in around 28.65, 66, which is also around the 100-hour moving average. So the mid 28.60 area is very good resistance. Break above 28.71 would be a little bit more positive. Now we've also got this declining trend line that kind of coincides with the 500-hour moving average. Now this is, as I say, this is declining, so this is more around the 28.90, 28.95 area today if we were to break above 28.71. A break below 28.50 in the E-mini S&P, that would confirm moves to the downside, which is pretty much what I'm expecting. A little bit of fib support down here at 28.37, 28.35. So a break below 30 is what we then need for any shorts for our bears to really get control of this market. Dow Jones still hovering below my trend line, which comes in today at 25,880. So holding below 25,900 will be negative. If anything, this chart looks more negative than the E-mini S&P. Again, head and shoulders pattern probably playing out here. And the 50% fib has been doing its job perfectly. We didn't even manage to test it yesterday before we turned lower. So Dow Jones, I think, looks quite negative. We'd have to clearly get through 26,000 for that situation to change. And now the Nasdaq looking quite negative. We're below the 200 and 100-hour moving averages, holding below there. So that is obviously a negative. What have we got on the daily chart? Again, head and shoulders pattern potentially playing out. I've been calling this for quite a long time, at least a week or so. We watch the neckline at 72.90. A break below here is a confirmed sell signal. If it takes a few more days to get there, by that time the 100-day moving average will be a lot closer. So a break below the 100-day moving average will be further negative confirmation. Aussie dollar in a bear trend, as we know. I've been talking about how oversold this pair are, and I'll remind you of that today. We had remember the small double bottom that I pointed out yesterday as well, which I didn't say was necessarily a bull signal, but I do think that it could indicate that we're going to trade sideways. You put those factors together, we could trade sideways, and we certainly did yesterday. 100-hour moving average doing its job as I suspected it might do yesterday, so 68.96 was the high. So 68.90, 68.95 will be today's first resistance. This trend line is no longer relevant, so I'll take it off. Much stronger resistance at 69.10, 69.20. So that would be a nice little sell area on the Aussie dollar if we got there, assuming my idea is right and assuming that we will continue to trade sideways until either we see a buy signal or we break below 68.60. New Zealand dollar remains in a bear trend. We were selling it on any move towards the 100-hour moving average and the trend line resistance there. Doing a good job. If you're holding shorts, you're looking okay. Again, a bit more sideways action yesterday because we're getting oversold anyway on the daily chart, but no buy signal, a little bit lower yesterday. There's always the potential for it to move sideways as we get oversold, just as I've shown you with the Aussie dollar, but I need to update these Fibonacci levels. But I'm definitely no buy signal. If we got anywhere near 65, I'm going to have to take these fib levels off as well, not updating my charts before I do my videos. If we got anywhere near 65.20, 65.25, that looks like a decent resistance level today for obvious reasons. I don't need to explain that to you. I would need a stop above 65.40. We get above 65.45. That's going to look a little bit more positive in the short term. So I'd have to re-examine that if it happens. Right, dollar yen, I've had us getting short at 110.50, 110.60 this week, and that trade worked nicely. We dipped as far as 110.23 yesterday, so we've got around 30 to 40 pips profit already in the bag, and I think this could continue lower, so I think holding shorts looks fine to me. We will need a move below, that was a daily chart, we'll need a move below 110.15 for further downside pressure. There is good support around 110.80, sorry, 109.80, 109.80. So if you're happy with, well, if we get there, that would be very nice indeed, because you'd be looking at potentially, what, 70, 80 pips profit. That's a decent enough trade for the week. So I would suggest taking profit down there in case we bounce. Euro yen, I had our selling opportunity this week up at 123.85.95, and unfortunately we just missed that. Well, we missed it by 12 pips. So we have come down and we are testing support, which I suggested yesterday, I think would be good support around the moving averages and the trend line. So we're holding just above there. You can see sort of 112.95, 112.85 is the support level. So we'll see what happens there today. It's the only support level really of the day that matters, so it is important. A break below 122.75 would therefore be negative. Holding on to 122.95.85 would of course be positive, and if we can get back up through 123.25, then we may even retest the previous high, or this week's high I should say, around the 123.70 area. As you can see, the 500-day moving average is coming down to meet that area now to add to that resistance. Euro is just confusing, remains confusing. Inside day yesterday, so we held a 35 pip range. Can you really do much with that? Fine if you're a scalper looking to nick 10-20 pips here and there, I guess, but this to me doesn't tell me an awful lot. That trend line is now no longer relevant. We've got good resistance up at sort of 85.95. Where did we get to yesterday? 180. Sorry, that was earlier in the week. 111.87. I would suggest, yeah, 111.85.95. You could try a little short there. That's about the only idea I've got for the euro. Stop above 112.00. Canadian dollar, US dollar versus the Canadian dollar, I should say, doesn't seem to want to move particularly far in either direction. On the downside, every time we move lower, you can see these long tails. Buyers come back in. We had a big long tail here yesterday, having beaten previous lows, but the buyers came back in. So same on the upside. These long tails, long candle wicks show how when we move too far from sort of this 134 mid 134 area, the sellers come in. So that's all I can say. I mean, there's no pattern, there's no indication of where the market might break or go to. I'd leave it alone if I were you. Cable, the pound versus the dollar, I've been negative on that for a very long time. Well, days, if not weeks, and we continue lower. Yesterday we got to a new low, 126.22. I don't see any reason to buy this. I don't even see any reason really to cut out of short positions. There's nothing in the short term, nothing on the hourly or 4-hour chart. The only risk to being short is the fact that we're getting significantly oversold on the daily chart, but we're not really testing any important support levels. Maybe lighten up on shorts. If you have been short and you're making money, maybe, you know, take some profit on at least half the position in case we bounce, so that you're in a position to sell again. But really, this just looks negative to me. Just looking at the 100-hour moving average would probably be a place to sell again. 127.20 might be a decent area to sell. I'll just throw some fibs on here while I'm doing it, see if that gives me any extra indication. No, not really. I can put a second fib level here actually. Okay. Yeah, I guess 127.05, 127.10 would be a good resistance level. It fits in nicely with the price action, and by the time we get there, the 100-hour moving average will be adding a little bit of weight to that level too. There you go. That's a potential shorting opportunity in a very clear bear trend. Gold, I've got that support level at 1273, 1272 that I've been talking about all week from the trend line. Here we go. Look, 1274 it is today. Now we're just dipping below the trend line. So maybe This spike was the first indication that we will break lower. So if we hold below 1274, 1276 today, the outlook is more negative for gold. We're only starting to get oversold, so there's no reason there to rule out a move to the downside, put it that way. Clear resistance at 1277 as well, so it's only really above 1278 and let's call it 1279 that this looks more positive, but even then we run into resistance at 1282, so this isn't looking too good for the bulls. It would certainly be worth a short in the mid 1270 area with a stop above 1279 and see if we do continue lower after what looks like a breakout to the downside. Silver chart looks negative. I've talked about a consolidation at this trend line after moves to the downside. Again, just getting oversold, but nothing serious, so I wouldn't worry about a particularly strong bounce back. What have we got on the hourly chart? Well, we're holding the 100-hour moving average. Yeah, I think I think silver supports the case for precious metals to move to the downside. Clearly in silver we'll want to break below this trend line. So watch for a break below 1435 to signal further moves to the downside in silver. If we get a bounce back, we've got good resistance around 1470 to try a short. You can stop above 1475 on that trade. Oil's working out too. Oil, I talked about 64.00 being strong resistance. We didn't quite get there. We got to 63.81. But yesterday I suggested that we could turn lower with these long upper wicks showing that sellers are coming in. And at last, oil did really collapse actually. I'm not sure if I expected to move quite as big as that to the downside, but I did expect to move to the downside, and I did suggest that we would test that support level around 60.90, 60.70. We're in the July contract now, so look for us to test that before the end of the week. If we close Friday below 60.60, that's going to be another sell signal. I've got a feeling oil will break lower. We've got a trend line down here around $60 as well. So far so good, lower as expected. Watch that support level. We might bounce off it on the first test, and you don't want to be short again unless we break below 60.60 and then a break below $60.